All right, so you guys can see here, this is how I did on the day, how each position is doing. I'm at $380 right now. So for trades for the day, I've added my 30-20-10 strategy. So it's just a regular trade that I do. Then we did the coppers. So we'll go over that in more detail later, but I opened up my coppers position, got a strangle on that again. And then I closed a bond. And the reason why I did that was because there was no volatility. I wasn't getting anything out of that position. So I just decided to close it just to get more capital in my account and just to be done with it. That was the first time I had traded that and didn't really get anything. Maybe when volatility goes up in bonds, it'll be better. So you can see with my 30-20-10 strategy, it's the 30 days to expiration, 20 delta, $10 wide put spread. I'm doing that position every day. I added a position. You can see from the open, I'm at $290 right now. So it's been staying pretty steady. And I think sometime in the middle of April, I'll actually start closing trades and putting them back on at 30 days. So it'll start looping itself into a big chain here. So right now, just adding a position every day. It's like clockwork right now. It's all totally mechanical. There's no thought into it. It's just, okay, it's the market's open. It's time to place a trade. And you can see here on the curve mode, it looks like just a jumbled mess, just all kinds of different positions here. So it's hard to visualize on this graph, but you can just see the number of positions that I've got. So I might be going against my better judgment trading coppers here. The implied volatility rating is at 69.8 right now. I think I opened the trade at around 68.8. It's at a low point from where I've seen it on the IV rank. So it could easily go back up to 94, and then it's going to hit my P&L pretty hard. But because I had seen it at a new low that I haven't seen before, I think the volatility is going to settle down a little bit more instead of going back up to the 90s. Because if you look at the chart, we did see some really big moves here early on, and we were seeing the IV rank up to 94 that I had seen it. And then it's starting to decline here. So I think we're going to start seeing it settle here, just kind of my take on it. So I saw it dip down below 70. I decided to go ahead and take advantage of the IV. It might not be going up any higher after this. So we'll just see. I'm kind of going against my better judgment on that because I have seen it go up really high and I don't want it to affect my position. So you can see I've got it right here. I'm up $6.25 after it's opened again. But you can see from today, I'm down $31.25 overall. So not a huge deal. It's not something to be worried about. The price is actually doing just fine. So I opened the position at 382 on the put side, and I'm at 423 on the call side. And I did it pretty wide. I'm around 17 delta, not 20. I decided to go pretty wide because I am getting closer to that 21 days. I'm using the 30 days to expiration right now. It's the same contract that I was using with my previous trade. The next opportunity I think we'll have is around 63 days. I'm waiting for that to get closer to 45 days. I think 63 days is too far from what I'm wanting to do. I want to see something closer to 45 days. No real reason behind that. 63 days could be fine. I just decided to go ahead and go with the 30 days because it's close. It's reasonably close to 21 days. If I need to manage it, I can manage it within just a few days here, maybe a week or two. So that's kind of my justification for doing 30 days instead of 63. So if we look at the curve tab here, you can see the price is still sitting really steady here. It's not moving too close to my put or my call. It's pretty well right in the middle. That's exactly where I want it. So even though I'm seeing negative P&L right now on the position, it's not a big deal for me. I think that's going to change pretty quickly over time. With the theta, I've got a really good theta value. Let's take a look at that really quick. I missed that on here. Copper, we're at 41 theta right here on this move. So that's good to see. So I'm pretty confident in this position. Even though the IVR is pretty low from where I've seen it, I think we'll continue to see it go down, and that's why I placed the position. We can see with Tesla stock here, it ripped up in pre-market and it continued at the open, and then it started to sell off throughout the rest of the day, and it settled at a decent price. You know, we're sitting at around $178 right now, which is good to see. I mean, it could continue to be going down. Instead, it's going up. So even though we saw selling off for the rest of the day, we're at a new position at a good high. We could potentially see it keep going up. Let's take a look at the daily chart. I know I was talking about yesterday that I'm not really sure what I want to do with Tesla. It's hard to say, you know, do I just cut the loss and move on and find better opportunities? I'm using up $5,500 of my capital. That's roughly a third of my account that's stuck in Tesla right now, which is not doing very well. So overall, it's been a bad move, at least in the short term here. I think in the long term, Tesla is going to go up. But just as an options trader, I'm looking for more of a short-term time frame here, I want to be able to get out of this position and look for other opportunities. Even though we did have the price go up, we see a bearish symbol here. It's an upside down hammer. That's not a good move. That shows strength for the seller side. So that can be a sign of weakness on the price action here. So it's not something you want to see on a stock you want to go up. Either way, it is holding that level, and tomorrow is going to tell us if it's going to correct and come back down toward the 80 MA. We could see it push up to the 50-day moving average here. And if it breaks through this 50-day moving average, if it can break through this resistance and hold support, then I think we could see it push up to the 200. And again, it's going to be within that bull flag here. So even if it does break up through these levels, we're still going to be within this bull flag. So it doesn't have to be a full-on breakout here to go back up to around 200. So that's really why I'm wanting to hold on to it. I haven't sold it. I think we can still see a rebound here, even though the stock is in a channel going down and hasn't broke out to the upside yet. I think we can still see it turn up in the short term. So I'm holding on to it. I'm really hoping to be out of the position by the time earnings hits. And I have to make the decision at some point on whether or not I'm going to stay in the position through earnings or if I'm going to get out before. So either way, earnings is coming up, and that's something that I'm going to be focusing on here with Tesla. That's why I'm covering it every day, because it is a large portion of my account. It's going to affect my performance for the rest of the year. So I want to go over my corn position. It's a little bit concerning to see the price action here because we are seeing some weakness. We do see some levels of support here, and I think if we can stay within this channel here, that will be okay. There's no problem here. But let me show you on the options chain where I'm at here. We're at 31 days. The price has gone down since I opened the position. We're hugging the put side here. So I'm right here at 415 on the high of 470. We could continue to see selling off here if it's going to continue to show weakness. Definitely going to be keeping my eye on the corn position because it's not really showing much strength on the upside. And it is on a downward trend. So you do see a little bit of turning up, but not much strength. So I'm hoping that the volatility, which is at 39 right now, the IVR will continue to go down. The estimated move will continue to contract here, and the price will just stay steady in this range. So nothing alarming yet. It's just something to watch because I just put on this position and it's already kind of hugging my put a little bit. So just want to keep that on focus here. And we can see it's still within the range here. Nothing, like I said, to be alarmed about, but just something to be focused on, that things could go south here soon if we start continuing to see a sell-off. So might be having to make some adjustments on the call side if we continue to see prices go down toward my put, and you'll be able to see how I plan on adjusting this position. So overall, things are looking really good on my account. I'm making really good returns right now. I've had a big week this week already. Even though I'm down on Tesla, still making money and making progress toward the 50% return. So if this video was a help to you, hit the like button. If you want to join me on my journey for a 50% return by the end of this year, hit the subscribe button, and we'll see you in the next video.